Hey, what's up, everybody? Thanks for checking out the Because Bitcoin YouTube channel. Today, we are going to be discussing the custom trading indicator created by Because Bitcoin called the trading current. Now, just a little bit of background on it. It's called the trading current because it's like a current of a river. It's much easier to swim downstream rather than upstream. So, obviously, looking at the chart right now, we are in a down trend. So it's probably best to be looking for shorts in theory because it is much easier to swim downstream. The trend is your friend. Now, what is the trading current? The trading current is a standard deviation regression channel, and it's constantly being repainted as new data comes about. And new data is just new candles. So every time we get a new candle, it's going to shift. Now, this number down here is called Pearson's coefficient. As it pertains to trading, just think about this number as the strength of the downtrend. Right now, we are in a 68.75% downtrend. The highest it goes is 100. The lowest it goes is 0. I've never seen 100. I have seen 0 just for a split second, but really think of it as any sort of downtrend or uptrend over 70, 80% is a strong trend. This is sort of an intermediate trend. Now, what are these numbers right here? CP4, CP3, blah, 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 mean, CN3, CN4. This stands for current. So the name of the indicator is called the current. So current positive 4, current positive 3, and then current positive 2, current positive 1, the mean, and then current negative 3, current negative 4, and then obviously Pearson's coefficient. So what does all that mean? Well, the trading current is just math, and candles on a chart is just data points. It's just plots of data. So what exactly are we looking at here? What we are looking at is more or less a bell curve. So CP1 and CN1 are 1 or positive 1 and minus 1 standard deviation away from the mean, and the mean is 0 right here. And then CN2 and CP2 are positive 2 and negative 2 standard deviations away from the mean. And then obviously 3 and minus 3, and then CP3 and CN3 are positive 3 and negative 3 standard deviations away from the mean. And then obviously 4 and 4. Now, these percentages are very important, and this is how we use the current to trade. So CP1 and CN1, which is covered up by a little bit of data, it's colored by these yellow lines. It's everything here that's yellow right in the middle. And as you can see here, by the bell curve, it's just math. This is created by statisticians. It's concrete. 68.27% of all data of all candlesticks occur between 1 and minus 1 standard deviations away from the mean. So basically 7 out of 10. 2 and minus 2, so we'll move these here. So CP2 and CN2, 95%, 95.45% to be exact, percent of all data candlesticks occur between, and I'll just draw this line here, I'll do this, between this line, we'll do blue and we'll make it really thick, between the CN2 line and the CP2 line. So what is this telling me right here? Well, let's just take a quick look at it, right? Every single time that we pop outside of CP2 or underneath CN2, look what happens. We get some sort of mean reversion, because as you can see by this picture up here, 95.5% of all data occurs underneath this blue line and above this blue line. So when we're in a almost 70% downtrend on a high time frame chart that goes all the way back until last summer, and you see price overextended over 2 standard deviations away from our mean line, and we know that 95.5% of all data occurs underneath, you could call any sort of price action above this blue line or below this blue line a statistical outlier or a deviation. So you could be looking for shorts up here, and you could be looking for longs down here. It's really quite simple. And this indicator can be used on all time frames and has a wonderful and truly astonishingly high hit rate. And especially using it on these long, high time frame swing trades. Let's clear up this chart a little bit, and I'll show you guys exactly what I'm talking about. So it's no surprise that we've been extremely bearish all year. But with that said, the trading current gives you that behind the curtain look at the market and where we really are in terms of our trend. Because oftentimes trends can be misidentified, and this takes all the fuss out of it. It's just math. 95.45% of the time, we get mean reversion when we go outside of this line. It has a 95.45% hit rate when we deviate outside of this blue channel that I've manually drawn here, outside of CP2 and CN2. It's just math. There's really no need to overcomplicate things, not even in the slightest. So let's go back and rewind the chart. Let's see how we looked right here. Let's let the current load. So obviously you can see that Pearson's coefficient did adjust a little bit. We're now in a steeper downtrend, but you can see right here, we were more or less free falling, right? This is scaried along here. Do you really want a long? I mean, let's even go back to, let's go back a little bit further actually. Let's go back to right here, and we'll play it forward a little bit. So if we're sitting here and we're in the middle of September, it looks like we're about to go down forever, right? This looks horrible. Chart looks like it's going to bleed forever. And I'll tell you what, you just follow the current. 95.45% of the time when we get underneath this line right here, we tend to get some sort of mean reversion and sometimes then some. So let's just see how this would have played out, obviously. Next candle, next candle. Again, it's repainting, so we're going to have to adjust. But you can see here, we're getting really close to CN2, so current -2. And we know that when we get outside of CN2, underneath it, while we're in a downtrend, 95% of the time, we do get a bounce. So let's keep on moving. Oh, we're right below. This is now considered a statistical outlier or a deviation. And the only reason I have this blue line here is just to make it a little bit more clear. So this is a statistical outlier in this band, this green band, which is, again, green is for buy, red is for sell. So if you just blindly listen to the current, even as awful of a downtrend as this looks, it looks like it's going down forever. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. So I'm going to buy right here. This looks terrible, but I trust the math. The math is telling me that 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened. Let's keep on moving. I'm going to remove this line now because, again, it keeps repainting as we move up. Look at the bounce that came after. With how horrible it looked. It looked like we were going to zero on Dow Jones. The DJI. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move, and not that long of a period of time. It's just math, you guys. It's just math. That's all it is. And don't even get me started when we get outside here into, outside of, on the high time frame, CP3 and CN3, if we ever get priced down here or up here, 99.73% hit rate. 99.73% of the time, we fall underneath this line and above this line. These are real statistical outliers. And again, the current can be used on all time frames. I will show you just one more glimpse at how it looks on a really low time frame. We won't go as in depth for the analysis, but we'll show you here on the low time frame. This is the 4 hour. You can see that we're in a 79.9% uptrend, and we're really just sort of ranging here right now. So what I'd be looking for, given the strength of the uptrend, we're in an 80% uptrend. Most data occurs 70% of the time between CP1 and CN1. A solid play here would be looking for some sort of move down to CN2, which we know 95% of data occurs above. So we're in an uptrend, we get a dip, and then you could look for some sort of bounce from there. Maybe it's just mean reversion. Maybe we go up here and we actually continue our uptrend. It's really hard to say. You have to use it in confluence with other time frames. But potentially, this is the area that I'd be looking to bid down here, somewhere around CN2, just given that we are also in a strong uptrend. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. And we've got a bunch of people that really know how to trade with it well and constantly, trading and sharing charts and analysis in our Discord. So that'll be in the description below. If you want access and you want to join, I believe we've got 750 people in there right now. So really strong community. But there's other features to the current as well. So for example, you can set, the lengths all custom, and we also have multi-time frame alerts right here. So you don't even have to be on the current. You can set it in the background. You don't even have to be at your computer on TradingView. You can ping your phone and you can say, you know what, I would like on the 4-hour chart, line 2 pertains to CN2 and CP2. On the 4-hour time frame, when price crosses over lines number 2, so CP2 and CN2, and Pearson's coefficient is, let's just say, over 50, I would like to be notified. And you can set that alert. So we can show you how to set all those alerts so that you never miss a trade on any time frame. And again, guys, it's just math. It is just math. It's just this right here. That's all it is. And trading is just data points. There's no need to overcomplicate it. So anyways, guys, that is it for today. I hope you enjoyed this video on how to use the trading current by Because Bitcoin. If you want access to it, again, it's totally free. Just hop in our Discord. Come say what's up, and we're happy to give you access to it and show you how to use it. It really has been a game changer in my trading career. And again, we're giving it away for free. I'm not selling you anything on this. So if you want to use it and you think it's cool and it will help your trading, which again, I can guarantee it will help your trading, just come use it. It's totally free. Hop in the Discord, come hang out. And again, if you like the video, please help us out by subscribing to the YouTube channel. Thanks, and we'll see you on the next video.